Hello fellow chartists, welcome to my YouTube channel. I am the Chartist. Today is Saturday. I didn't make a video yesterday, okay, but today we're going to reflect on yesterday's market price action, what happened, and we're going to talk about a little bit what the plan is for next week, okay? But first, here's the flow sentiment. Flow sentiment is bearish as always, 74% in the puts, okay? This is filtered for 200K premiums or above, as you can see here. Lots of bets to the downside, okay? Keep in mind, a lot of these contracts are about a month to 3 months out, okay? Also, I want to point out the VIX, okay? Remember, the VIX inverse is the SPY, okay? VIX is 86% in the calls right now, all right? And you can see big money betting to the upside, like this one, 6.6 million. This is a call for April 20th expiration date. Now, one thing I do want to mention that as I look through the VIX, these orders, is a lot of expiration dates for April 20. April 20 seems to be a very popular date. All right, 6.8 million, 6.2 million. These are a lot of money betting to the upside for the VIX. Expiration date, April 20th. I don't know why. I'm just reporting. I'm just showing you guys. I'm just sharing information. All right, guys. So that's the flow sentiment. This is my Discord, where I give real-time intraday analysis throughout the day to help keep my members on the right side of their trades. And the plan yesterday, okay, well, I wrote here, my equilibrium level for SPY yesterday, I was referring to Thursday, was 446. Bullish above, bearish below. Keep the trading plan simple. As of pre-market this morning, that was yesterday morning, SPY bounced about $6, recapturing the 200-day moving average, okay? So remember in Thursday's video, I mentioned I'd be more bullish, or was it Wednesday's video? One of them, I mentioned I'll be bullish if SPY can recapture the 200-day moving average, all right? Which it did, and so, yeah, it did on Thursday. And then yesterday, my plan was 453.5, that's the 61.8 retracement level. Then 55.5 to 456 zone are my upside target / resistance, as long as 449 to 450 zone holds. So remember, on Thursday we recaptured and cleared the 449 to 450 zone. Okay, I had a price target of 449 and 451, if you recall. Okay, it cleared 449 but came about 50 cents shy of my 451 target. But nonetheless, we cleared that zone, 449 to 450 zone. That was resistant for Thursday. So Friday, it was support, and we wanted to watch if it holds, okay? If 449 fails, we head back into the chop to 446.5 to 447, then 445.3, bearish below. So, okay, so the charters would have been bearish if we lost 445.3. That's the 50% retracement level, okay? If bears don't get a dip from 453.5 to 454 zone, they should get it at 455.5 to 456 zone. So I was expecting a dip or a decent pullback from one of our resistant level. Okay, so the two things I was watching for: the 449 to 450 zone holding as support. Remember, we long at support, and to see if we'll get a pullback from one of our resistant level. Remember, we short from resistance. Okay, so if we look at the SPY here, 15-minute chart, it opened here 9:30 a.m. right here on Eastern time. It opened at 451.17. It dropped down. I had this little yellow trend line, intraday trend line here, and I was seeing some buying pressure off of this yellow day trend line. Some washes below, but you see with the wick that there was buying pressure, and it never gave us a confirmed close below this yellow line. Therefore, the yellow line was not lost in the morning. It was choppy though, very tricky to trade. And from this yellow line, a nice bounce all the way up to 452.98. That was 52 cents shy of my price target. That's the white line right here. That's a 61.8 retracement level. From there, SPY ran out of steam. Very unfortunate. Broke down this trend line and dropped all the way back down to where? Support. So this green zone right here, the green zone, that's the 449 to 450 zone. As mentioned in the plan, I wanted to see it hold that support. So if it gets tested, we got to watch a close eye. And obviously, you see these long wicks at the bottom here. buying pressure. So there was some quick wash below 449. This one went as low as 448.43. But that's where market makers trick us. There's so much noise in the market, right? So you're thinking, okay, it dropped below 449, time to get bearish. But in actual fact is, it never actually closed below 449. This candle closed at 449.04. This one closed at 450. This closed at 449.28. You get my drift? We never lost 449. And I mentioned the group many times. And to you guys, best time to turn bearish is when we actually lose a support level. We never lost a support level. A critical. We lost this intraday one. Nice scalp play if you noticed it on your own chart. But we never lost the critical one. Okay? It held. Some good scalp plays if you took it. As long as you followed the rules, though. Long from support. Or as close to it as possible, right? As long as you followed the rules, you should have been fine. Okay, as long as you respected your stop loss, because you might have faked out up here. As long as you respected your stop loss, keep your loss as small as possible. Because you keep your loss as small as possible, it's easier to recover it. If you keep your loss big, you can make some gains off of these scalp calls and it won't recover well, But nonetheless, support held, and as you can see, a bunch of bounces on from the zone. So a lot of buying pressure. It eventually bounced up as high as 452-ish, 452.19. Lost some steam again. Back tested the 450 level here. It washed into the 449, 450 zone though. And once again, back tested as support. Cleared. Back test. Textbook technical analysis stuff and a strong squeeze at the end of the day. Okay? A lot of people was getting bearish. Market makers tricked a lot of people. Because remember, on Thursday, 449 to 450 zone was resistant. Friday, it was a support. That's a win for the bulls. It never hit my price target, unfortunately. Got, a few cents close to it, but it never hit. But support held. The previous day's resistant level held as support. That is overall bullish and an overall win for the bulls. Not a big win, but a win nonetheless, okay? So let's take a look at the daily chart. Okay, and you see here the hammer candle. Okay, so let me bring my fib levels here. High of January, low of February. Okay, we're knocking on the door of the 61.8 retracement, guys. All right, I was expecting a pullback there. We got very, very close to it. Okay. We recaptured the 50% retracement level down here, also where the 200-day moving average is, purple line. Fake back down, making it look like a false breakout, but in actuality, it was actually a false breakdown. False breakdown right here, recaptured. Remember, recaptures after a false breakdown is bullish, guys. Bullish. Recaptured 200-day moving average, and now we start to head to the 61.8 retracement level. Okay, if we break above the 61.8 retracement level, my next target is around 456 to 458 zone. I think we'll get a decent pullback there. Okay, and of course, if we clear 458, that was the high of these candles, February 2nd high and the February 9th high, also the February 10th high. Okay, it looks like a double top, but I think that's more of a triple top. But could get that fourth top, we'll see. But if we break through, that cancels the fourth top. And I would be more bullish. 465 would be the next price target above 458. Okay? But first, we got to clear 453.5, which we have yet to touch. All right? I would be bearish if we lose the 200-day moving average again. If we lose the 200-day moving average again, because one fake breakdown is cool and is nice. But if we lose it again, I'm going to favor more downside. Okay, especially when it's this close to testing the 61.8 retracement level. It does not have to be perfect. It might be just short of it. It might overshoot it a little bit and then coming back down, or it might hit the level spot on. Okay, but all I can say is above 453.5, I'll be bullish until 456 to 458. All right, if we break above that, my overall sentiment on SPY would switch over to bullish. Okay, I'm a little cautious being a bull right now because we still have work to do and levels to take out. But it doesn't mean I'm not playing level to level. If there's a bullish opportunity trade setup, I'm going to take it. Just like if there's a bearish opportunity trade setup, I'm going to take it. Okay, so those are the levels we got to watch out for. And the support of the 200-day moving average, 446.6 right now. But we give it a zone, okay, because there's a lot of noise. And it's also the 50% retracement level at 445.3. Below the 50% retracement level, I would switch over to bearish. Down to 440 to 441, then 437. Those are nice moves to the downside. Okay, I'm just going to play it level to level. Now, I do want to talk about some things that might not be too popular, because the last time I shared about this, I didn't get good reviews about it. But it aged very well in my opinion. Okay, now if I go to the search bar on my Discord, I'll type in Elliot wave, and I'll get my old posts. Okay, now these posts I shared, it leaves the date. This one, March 9th. Okay, this is when I first talked about the Elliot wave. All right, and I mentioned, all right, we were in an expanded flat Elliot wave correction. All right, and I wrote here a recapture of 427 means closing above it and retesting support. All right, and let me see, the confirmation that I would need that we are possibly heading to a wave 3 is for SPY to recapture 427. And I was explaining what a recapture is, okay? So this was back in March 9th when I said that it's possible that SPY finish its correction, which was an Elliott wave flat correction. You see the short A wave, right? 3 wave A, B, C, which is the A wave, and then the up A, B, C. And then for the C wave, it's going to go all the way down past the A wave for a 5-wave move to the downside, okay? That was shared back in March 9th, all right? So here I am again doing it for you guys. This is the B wave right here. B wave goes up. So basically we got A wave right here. All right, that's the A wave. I'll make it bigger. This was the B wave, changed color so we don't get them confused. I'll put it blue, B. All right. So here is the C wave. C wave starts here. That's 1, 2, 3, 4, and 5. So that was the C wave right there. Boom. So if this was the Elliott wave flat correction, this right here. It's on bullwaves.org, and it tells you all the rules on what makes this an Elliott wave flat correction, which I checked myself, and it followed the rules. A short A wave, a long B wave to the upside, and then a 5-wave move to the downside for the C wave, and then that should end the correction. As you can see here, I shared a picture of it. This was March 9th, and I put a question mark. Is this the beginning of the 3rd wave? Could we be starting it? March 9th was around here. Okay? Aged very well. So, could this be wave 1 here? 2? And are we still impossibly in a wave 3? Okay? And then comes a wave 4 and then 5 up. Alright, I'll put that a different color. Okay? That is the question. Remember, wave 3 is the most parabolic, most bullish wave that's on the of the 5 waves. So wave 1 is a decent sized wave, but wave 3 is the longest one. All right? So that makes me not surprised why the SPY was able to jump, but what was that, $30+? So it aged pretty well, but I'm not a big Elliott wave analysis, whatever type of guy. The reason why I even gave this Elliott wave a chance was because, once again, I'm going to type this in, was because of seasonality. Okay? So based on seasonality was telling us mid-March, we should find a bottom and start heading to the upside. Okay? And we're going to get some chop towards the end of March. The end of March is next week, so going to be a volatile week next week according to seasonality. But ultimately, we're going to be bullish and head to the upside heading into April. And it says here, starting from mid-March. So I looked at it because I just tracked the seasonality. I'm not going to just trade based on seasonality. But I said, okay, well, mid-March is showing to be bullish because it was pretty accurate over here. It tracked well in January and February. Let's see if it continues, right? So mid-March was supposed to be bullish. And then I'm looking at Elliot Wave and it's giving me all this information that we're finishing the correction and we're heading into a new trend, which is pretty much tracking so far. Okay? So that's why I'm combining different ideas together to create my thesis. And as of right now, this is my thesis. Seasonality says we're bullish. Elliott wave, the expanded flat Elliott wave correction. I know other Elliott wave people, they might be using other corrections or patterns or whatever. Well, the chartist is using the Elliott wave flat correction. That's this one. And I illustrated with you as objectively as I can right in front of you to show you guys. And it's aged pretty well. Mind you, the original post was shared March 9th for Discord members. Okay? But anyways, so like I said, watch that 200-day moving average. All right? Below, if we lose a 200-day moving average again, we might get a deeper pullback, 440, 437. Okay? Yeah. So that's what I got for you guys. You know, I hope you guys remember. Remember, 453.5 is the next target. Above that puts 458. I would be bearish again if we lose 449. And then the next test is the 200-day. Then the 50% retracement level. Just play it level to level. If we lose that, then 440, 437, and so on and so on. Okay? That's all I do. I just acknowledge the different possible scenarios. I don't try to predict. I don't try to anticipate. I just acknowledge and stay ready and be ready to take action. Finger on the sell button, finger on the buy button, whatever, based on what the price action shows me. Okay? So, and look at the VIX. I've been telling you guys all week the VIX is looking bearish. All right? It's been showing signs of back test and go to the downside, loser support, back tested as a resistant, loser support, back tested resistant. And I've been telling you, if the VIX is bearish, most likely the SPY is bullish and vice versa. Okay, and we've been eyeballing this 200-day moving average for quite some time, and it's come within cents. If we just look at it, it looks like it touched it already. But actually, the 200-day is at 20.61, and the VIX closed at 20.80. So technically, it did not touch it just yet. But we've been bearish on it, so I hope you was able to catch the move. I don't know if anyone trades the VIX or uses it to help gauge SPY, which I do. Okay. So below the 200-day moving average, obviously VIX would be trading below all moving averages once again, which would be a good sign for SPY bulls. Okay? If you're a VIX bull and you want to see the SPY drop, you want the VIX to hold above this 200-day moving average or bounce off of it and recapture at least the 5-day moving average, which is currently at 23. Okay, guys? So VIX above the 5-day moving average, currently at 23. Wait, it's currently at 22.5. My bad. So above 22.5 may be some bullish signs for the VIX. Okay, and it may go test the 23.74 level. Again, 78.6 retracement level there. Okay, just play it level to level. Triple Q here. As you can see here, Triple Q did not make a strong move to the upside. However, it did find some buying pressure right off of the 5-day moving average, okay? Now, if you watch my How to Trade Like the Chartist video, links in the description below, I explain and talk about the power of the 5-day moving average, which is this red line right here. In a strong bullish price action, you're going to see the price action above the 5-day moving average with occasional bounces off of it. And as you can see, that's what we've been getting since mid-March. And if we go back, you can see it here a lot. When a strong move to the upside, is it usually stays above the 5-day with occasional bounces and just keeps on pushing it up. And the same can be said when the price action is bearish. It just stays below the 5 and gets rejected from the 5-day moving average. Okay, and as of right now, that strong bounce, you see that long wick, that strong bounce over the 5-day moving average is a good sign that we can go test 363. All right, 363 is my 38.2 is my 50% retracement level, and above that is 374.2, which is a 61.8 retracement level. I would be bearish if we lose the 38.2 retracement level at 352.64. Okay, I also have some support here at 351.69, which is other fib levels from the March 2020 low to the January high. Okay, actually the November high, excuse me. All right, and it's currently at 351.69. Okay, so watch those levels. Below 351.69 is when I would be very bearish, and we can catch some decent big moves to the downside. Okay, but above 363, that's the next price target. If we clear that, 374 is in play. Dow Jones has been tricky to trade lately. All right, been up and down lately. However, yesterday, like I said, on Thursday we recaptured the 346 level. That's the 50% retracement level. We need to see follow through and treat it like support. Yesterday, you see that wick, that nice wick off the 50% retracement level, also bounced off the 5-day moving average. So we found buying pressure, and Dow Jones was able to close higher than usual. All right, 200-day moving average is still in play, 349 to 350 zone. Above that, next resistance will be at 351.64. That's a 61.8 retracement level. And if we clear the 61.8 retracement level, that's bullish. I don't see why anyone would still be bearish on it. Probably back in the buy the dip market again for Dow Jones. But above that, 359.5 and then all-time highs again. IWM managed to close above the 5-day moving average, okay? Seeing some buying pressure. The bulls are still keeping this up, which put 209.7 in play, all right? So there's support around 205.7, which is the 5-day moving average. So below that, you could say 205.5. Below that, we can be bearish down to 201. That's the next support. All right, 201.4. Below 201.4, I will be very bearish, and that will equate to a false breakout of this green trend line where we could favor new lows, okay? Only below 201.4, okay? As of right now, 209.7 is the price target, and above that is 216.39. Tesla is looking good, okay? Since mid-March, it's just been going up, 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 up. All right, and today it finally had a sideways day. Now on Thursday, this candle right here was sideways, but it still managed to close higher than the previous day's close. So that was still technically an up day. But yesterday it just chopped. And, this is very healthy. All right, SPY needs to just base for a little bit, okay? Because you see all these green candles just go straight up, very unhealthy. So some basing is very healthy. Cool down that RSI. So I just want to watch to see if, as long as support holds, support's at 972.71. If it bases and it stays above that support, that's bullish, and it's just building strength to go up higher. All right, 1036.8 and then 1128.2 is next price targets. Okay, I will turn bearish if we actually lose a support. As always, turn bearish when we actually lose a support, a confirmed close below support, because there's a lot of noise in the market, and the market makers are always looking to trick us and fool us. All right, don't let them fool you. Anyways, as long as support holds 972.7, I'm bullish on Tesla, 1036, 1128 are price targets. I'm bullish on Apple as well. Why? Because we finally broke out of this multi-month bull flag a few days ago, and I said we want to see follow through, and it has certainly showed follow through, okay? But price action is pretty unhealthy right now. Since mid-March, it just goes straight up. Very unhealthy. So what we want to see is either basing or some type of pullback, okay? Have support at 170.6. That's the first support, all right? That's the 5-day moving average. It could move up a little bit by Monday. We'll see. Okay, but just watch that 5-day moving average. I have a price target 176 to 177. Above 177, I would favor back to all-time highs and possibly some new all-time highs, but we possibly get a pullback first though. Okay, if we drop below the 5-day moving average, the critical support is this breakout level around 168.7. Okay, 168.7 must hold. If Apple breaks below that level, that's a false breakout and possibly new lows incoming. Unless we recapture, of course. And here's Bitcoin. It managed to close above. Let me see. I think that's the 38.2 retracement level. Yes, at 44.1K for Bitcoin. Okay? But the big levels that I'm watching, I want to see it break out of this triangle pattern at 44.6K and recapture this multi-year trend line that's currently at 45.1K. All right, unless it recaptures the multi-year trend line, I will not be bullish on Bitcoin. I'll just stay on the sidelines, okay? Because there's a chance it could drop back down and continue to fill this triangle pattern out for as long as it feels like it, okay? But if it breaks above 45.1K, recapture the multi-year trend line, and the best time I would turn bullish. Okay, guys? So thank you guys so much for watching. Thank you guys for giving my video a chance. I hope you guys been making a shit ton of money, or at least learning and getting better as traders. And I'll see you guys all soon.